Welcome to Skylands Global mini webinar series. Session 2 is a guide to exempt options for fund managers entering Japan. Our webinars are intended to be brief and practical resource for legal compliance professionals and management of investment fund and financial services companies who need high-level understanding of key compliance issues. Any information or opinions contained in this series do not constitute legal, accounting, tax, or investment advice. This session will give you the basic knowledge about the exempt option available for investment fund managers to conduct their business in Japan under the local Japanese Securities and Exchange Law. The applicable local law is called the Financial Instruments and Exchange Act of 2007, or FIEA. Licensing in Japan for investment management and brokerage business is organized by the type of business you conduct, the type of financial instruments you invest and offer to investors, and the type of investors you target. If your company intends to conduct privately placed investment fund business targeted to qualified institutional investors, the exempt reporting entity option is available. Typical examples of such business include hedge funds, private equities, and REITs. These exempt status are called SPBQII, or Specially Permitted Business for Qualified Institutional Investors, and SPIMB, Specially Permitted Investment Management Business. They are also collectively referred to SPO, or Specially Permitted Business Operator. This exempt option allows certain institutional investment funds to conduct specially permitted businesses in Japan without a registration, instead by becoming a reporting entity to the financial regulator, FSA. Specially permitted businesses are defined as private placement of investment funds among Japan-domiciled investors, resulting in more than one qualified institutional investor and no more than 49 non-qualified institutional investors. And secondly, management of a private investment funds on behalf of those Japan-domiciled investors. The key regulatory and economic advantages of exempt status are tangible. Therefore, it continues to offer a cost-effective option for many managers. The advantages include no requirement for minimum capital, Japanese incorporation, or presence of a local office in Japan. Except a Japan-based Japanese-speaking compliance contact person is required as of March 2016 to be reported and be available to FSA. This function does not have to be an employee of the SBO, but can be outsourced to a third-party agency. As of March 2016, the Securities Exchange rules related to the specially permitted businesses have been revised. The new rule applies to all SPOs. All provisions are effective immediately for newly applying SPOs. The existing SPOs are given a grace period until the end of August 2016 on some of the provisions to fully comply. Careful consideration should be given. These compliance obligations remain even if you no longer accept new capital from Japan-domiciled investors, as long as you continue to manage money from those investors. Let's break down the newly implemented requirements for SPOs into 6 essential components. 1. Greater information filing with FSA, comparable to that of a fully registered investment manager. 2. Narrower definition of permissible investors who are not qualified institutional investors. 3. Introduction of additional disqualifying factors, including requirement of a Japan-based, Japanese-speaking compliance contact for FSA. 4. Newly introduced requirement for public disclosure of certain documents. 5. Broader scope of conduct control rules, tighter supervisory inspection, more stringent financial penalty and legal sanctions. And finally, filing of annual business reports to FSA, as well as annual disclosure of public explanatory document concerning business reports. Detailed discussion of these rules is beyond the scope of this webinar. How to best comply with them, however, depends on the current status and future plans of your business. For practical consideration, the following questions might help in planning and maintaining compliance with the new rules for SBOs. Which funds do we still have existing with the Japan-domiciled investors? Are they closed for new capital or not? Do we want to fundraise in Japan for the existing or newly formed investment funds? Do we have internal policy and procedures to control and record qualification of non-institutional investors domiciled in Japan? Do we have an in-house Japanese-speaking personnel who can be assigned as a Japan-based compliance contact? Or do we need to seek a third-party agency for this role? What reporting documentation and when do we need to submit to the FSA? What reporting documents do we need to make publicly available, how and when? How do we incorporate and implement additional policies and procedures for the conduct controls? How are we prepared for possible inspections by the FSA? What functions and responsibilities of related legal compliance works should we seek assistance from the external legal counsel or utilize the third-party compliance agency services? For questions regarding these topics, how to implement Japanese compliance program, or interest in our agency support services, please contact Skylands Global by email info@skylandsglobal.com.